Record highs on Thursday. The worst tech sell-off in 6 weeks on Friday. One earnings report from Broadcom wiped out billions in market value in a single session. Markets reminded us this week they don't move in straight lines. Here's what actually happened and what it means for your money. I'm Burke. Every week, I break down what's moving markets. My goal is simple. Give you the facts, explain what matters, skip the noise. Let's get into it. The S&P 500 fell about 0.5% for the week, closed at $607.76, still up over 17% for the year. Small cap stocks actually gained. The Russell 2000 rose over 1%, hit an all-time high midweek. Equal weight stocks beat the big names too. That's a healthy sign. It means gains are spreading beyond just the largest companies. Where did the money go? Defensive sectors and cyclical value stocks led the way. Gold miners jumped nearly 6%. Gold itself is testing record highs around $4,300 an ounce. Central banks around the world keep buying. Regional banks gained almost 4%. The Fed's rate cut helps banks borrow money more cheaply. That's good for their profits. On the losing side, oil and gas stocks fell. Semiconductors, those are the companies that make computer chips, dropped nearly 3%. Technology overall slid 2%. Friday's sell-off spread like a cold through the sector. Let's look at the most significant individual stock moves. Lululemon popped nearly 10%. Earnings beat expectations. The CEO announced he's stepping down, and the board approved a $1 billion stock buyback. A buyback is when a company uses cash to purchase its own shares. Fewer shares outstanding means each remaining share becomes more valuable. JPMorgan rose nearly 6%. Banks love the Fed's rate cut. Now the losers. AutoZone dropped almost 10%. Earnings missed. Tariffs squeezed their margins. Broadcom fell nearly 8%. The company actually beat earnings estimates, but comments about profit margins spooked investors. Friday alone, the stock dropped 11%. The Federal Reserve cut interest rates again. Third cut in a row. Rates now sit between 3.5% and 3.75%. Here's what the Fed does. It controls how expensive it is to borrow money. Lower rates mean cheaper mortgages, car loans, and business loans. But Chair Jerome Powell sent a clear message. He said the Fed is well-positioned to wait and see. Translation, don't expect many more cuts. The Fed's own projections show just one more cut in 2026, one more in 2027. Markets had priced in more. This matters because it affects everything from your savings account to how companies grow. Quick pause here. If you're finding this helpful, I put out analysis like this every week in our free newsletter. No fluff, no spam, just straight market insights delivered to your inbox. Link is in the description below. Takes 10 seconds to sign up. Now back to the review. Tariffs remain a big story. Average U.S. import tariffs now sit at about 15.8%. That's the highest since the 1930s. Think about what that means. Higher costs on goods from Canada, China, and Europe. Companies pass those costs to consumers, or they eat into profits. Economic models suggest tariffs could shave about 1% off GDP through 2028. Meanwhile, gold keeps climbing and testing $4,300 an ounce. Central banks bought an estimated 900 tons this year alone. They're diversifying away from dollars. Let's look at how our portfolio performed. We returned a negative 0.2% for the week, slightly better than the S&P 500. Top performer, Kinsale Capital, up nearly 10%. The specialty insurer announced a $250 million buyback program. Management is signaling confidence. General Motors gained over 6%. Rate cuts help auto financing. Stock at its highest price since before the 2009 bankruptcy. Markel rose nearly 6%. Insurance stocks had a strong week across the board. On the downside, AutoZone dropped nearly 10%. Fourth straight earnings miss. Tariffs hurt margins. Broadcom fell almost 8%. We talked about this earlier. Strong results, but margin concerns triggered selling. Nvidia dropped 4%. No company news. Pure contagion from the Broadcom sell-off. Important point. These businesses are still performing. AutoZone grew sales 8%. Broadcom doubled its AI chip revenue. Stock prices fell. Fundamentals didn't. What's coming next week? November inflation data drops December 18th. Markets expect about 2.7% year over year. Any surprise could shift rate expectations. Accenture reports earnings the same day. That's a portfolio holding. Tells us about corporate tech spending. FedEx, Nike, and General Mills also report. Good reads on consumer and shipping demand heading into the holidays. Three things to remember from this week. 1. The Fed is patient, not pausing. Fewer rate cuts are coming than markets expected. Adjust your expectations. 2. Chip sell-offs don't change AI demand. Broadcom fell 11% on Friday, but they doubled AI chip revenue this year. Expect it to double again next quarter. Short-term noise. 3. Market breadth is healthy. Small caps hit records. Equal weight beat cap weight. Leadership is broadening. That's typically bullish. Weeks like this test discipline. Record highs, sharp sell-offs. For owners of quality businesses, focus on the business, not the price. Let time compound. If you want help building a portfolio of quality businesses for the long term, book a free consultation. Link is below. Have a thoughtful weekend.